Once again, this morning we wake up with a big news, and this one is jolt out of the blue given the fact that you have Donald Trump announcing that 25% tariffs on auto tariffs, and this is on all the companies that are not producing in the United States. They've said that they are not going to go lenient on this one, though he did say that he will go lenient when you talk about the reciprocal tariffs. So there are a lot of moving parts to this, and now it is 25% tariffs on cars that are not made in the United States.
Okay, so tariffs are at play,
Yeah.
but they are only on autos. What it means for the world, what it means for India, and is this a precursor of what we should expect on 2nd of April, if anything at all comes on 2nd of April. That is, I think, we need to really, mull over. First, 25% in terms of rate, tariff coming on auto, it was a matter of not if, it was always a matter of when. This again could be an indication that more tariffs are coming, and more tariffs are coming in pockets where the US right now wants to really protect that turf, and they want to ensure that the local industry is actually taken care of. What it means for India, which is what we need to focus on. Well guys, India is not a large exporter of cars to US. It's not, at least the listed ones. However, Tata Motors, because they have JLR, and JLR is in UK and Europe, what they export to US, which is more than 30% of the total market, that surely will get affected. So from an Indian market standpoint, the listed players may not feel the heat of impact, they may today feel the heat of sentiment. For Tata Motors and JLR, the numbers have to be redone. For auto ancillary suppliers who are exporting out to US, that they need to readjust, and they need to look at what will change in the overall scheme of things. So yes, tariffs have come, but I would say that this is something which is unlikely to really break the rhythm of the market, because markets knew something was coming. But when you superimpose this auto tariff with another prime line, which is that we would be super lenient, I would like to read in between lines here what it means for India, what it means for world. And when Donald Trump is saying lenient, I would imagine that from a market standpoint, the assumption was that the world order would change, trade would change. I think all that may not be at play. That playbook may not be at play.
All right, so that's the caveat there. Given the fact that yes, he's imposed a 25% tariffs on auto tariffs actually this time around, what he's also saying is the fact that the reciprocal tariffs will come in on April 2nd, but they will be lenient on some nations, is what actually Donald Trump indicated in overnight conversations that he's had. But back home, if you look at the way how we performed yesterday, we actually snapped a 7-day gaining streak. When you talk about benchmark indices, you saw over the last 1 hour of trading session, immense pressure actually building on the markets, with it being dragged lower by IT as well as energy names. Not just that, you also had the FIs on the other hand. Actually, that one is a surprise coming in, because it's 5th consecutive session that we've seen a buying from the FIs, and this is the longest buying streak in at least 6 months. And Nikunj, here also we want to read between the lines, or we want to say that this is it, this is the script, they are back.
Shell, so what are the big questions? And I'll come back to the FI point. First is the impact of tariff on the world and on India. I think it's going to be a measured impact. It's not going to be a scary impact. That's the tariff part. Second part, you say that FIs are back. Are they here to stay? And has the trend changed? Now let's look at the trend, because there's a pattern which is at play. That FIs, when they come back, they don't come back like for a weekend. They don't come back they don't come back in a flash mob. When they come back and when they go away, it is a pattern which historically has existed for a couple of weeks, if not couple of days. Now we can argue about the quantum, whether it's going to be more, it's going to be less, but the bottom line here is that when FIs they come back, they normally overextend their welcome. So I will not be surprised that until and unless something changes at a global level, that FI comeback could really extend itself, because other factors like dollar, strength in rupee, the turn of the economy, the way high frequency data points are coming out, all of them are purely indicating that there is a conducive hunting ground for FIs to come back and perhaps reinvest in India. This could be a function of short covering also. This could be new allocation changes which are happening because of year end. I don't know. Color of the money is always the same. But the limited point is that when FIs they come back, they normally come for a couple of weeks, if not months. So I would be optimistic rather than bearish on the FI front. Then what else is at play? Tell me what else is at play. We've discussed FI, we've discussed tariff. What else is at play? What is that other big question according to you?
One of the big questions would be, given the fact that, like you said, year end, we are coming to the year end, and also one of the biggest factors come next month will be earnings as well.
No, you forgot FI expiry today.
Oh yes, there's FNO expiry today.
FNO expiry today. You know, it's critical, it's crucial. Why? Because now we'll talk about the near term, as in aaj, kal, parso, right? What is near term here? Near term is that we've done very well for ourselves in terms of a short covering trade. But for next couple of days, I don't expect this market to do something special. I expect that 23,800 will act as a stiff glass ceiling for next couple of days. Large part of the short covering, I think in the near term, is behind us. Today, you may see that extra element of volatility, but given that there is year-end factor which could be at play, and that also would be at play on Friday, and then you go on Friday and then you come back on Tuesday, those factors in a sense may just jam the upside in the market. So we could be in this no trade zone where the bias is positive, where the rollovers will keep you exciting, the downside is limited. So let me put it this way. I think the downside in the market is limited. What we saw last week was a 4% rally in the Nifty and a 7-8% rally in the small and the mid cap stocks. That may not extend itself. I think the fresh cue for the market will only come after 1st of April, provided US President does not do anything on 1st of April, April Fool's Day. I think I'll wait for it in the near term. So that's question number 3rd. Question number 4th, you would say that what has scope to outperform and underperform? I think one place is banks and second is power. I think these two pockets in a sense are very clear why there is outperformance. Bank is where the money seems to be gravitating, power is where the energy seems to be gravitating.
If you like this video, then like, share and subscribe to ET Now.